What is up? Welcome back to another video. In this video, I'm going to be teaching you guys how you're going to use different ICT arrays to just be able to read price action and have a good understanding on where the price is going to go. So I'm going to be teaching you the strategy that I used to pass all my funded challenges, and that's made me profitable in the markets. So I'm mainly going to be talking about fair value gaps and inversion fair value gaps, and also liquidity, which is the target on where the price wants to go. So let's jump straight into it. Firstly, if you don't know what a fair value gap is, all a fair value gap is a 3-candle formation that has an imbalance or a price efficiency in between it. So if we look right here, as you can see, we have 3 candles. So candle number 1, candle number 2, candle number 3, and the first and the third candle do not touch or connect in any way. So that is a fair value gap right there. Another example is right here. Here we have 3 candles, so 1, 2, 3. And as you can see, from the top of the first candle to the bottom of the third candle, price does not wick or overlap each other. Therefore, that area here is the fair value gap. So that is just a quick understanding of what a fair value gap is. And yes, I'm going to be using the replay tool today to be going over the price action. But if you want to see me trade live, I trade live in Discord every single day, Monday to Friday. So just go to the first link in the description. That is my completely free live trading Discord. So yeah, let's jump straight into this. So first of all, if I was looking at this price action, I would first be able to realize that if we look up here, we have equal highs. Now, why are equal highs so important in the market? When we have equal highs like this that are separated, as you can see, this high was created at 10:25, and then 35 minutes later at 11 a.m. we have another high. So this is called liquidity. There is lots of liquidity sitting up here, and price action will most likely want to come up and sweep this liquidity before either going down or carrying on up to the downside. There's 3 different types of main liquidity. You have trendline liquidity, swing highs and swing lows liquidity, and then equal highs and equal lows. My favorite is equal highs. I just think that equal highs is the biggest draw on liquidity. Whenever I have equal highs or equal lows, I will never normally take a trade in the opposite direction, just because they are so perfect and such a big draw on liquidity. So what I mean by that is, if I got a perfect A+ setup right here, I would not take a short just because we have these equal highs, these buy side equal highs. So yeah, with that information, all I would do is I'd mark out this bullish fair value gap here. Now, why am I marking out this bullish 1-minute fair value gap? Because on the higher time frame, this is also a 5-minute fair value gap, and as you can see, it is currently being respected on all the different time frames. But I'm just going to be using this 1-minute fair value gap because I pretty much all of the time take my trades on the 1-minute time frame. So if we play out the price action, as you can see, we kind of chop around for a bit, but all I'm waiting for is just price action to come into this zone here, and I'm going to wait to see if we get a nice reaction. So right here, as you can see, we had this bit of accumulation. We are respecting this bearish fair value gap still, and we came down and we swept sell side liquidity right here. So sell side liquidity. Let me show you what I mean by that before it actually happened. So right here, we are just chopping around. So I would not really take a trade in this chop right here. I would want to see price create nice displacement candles, which would just show me that there is going to be some better price action. So as you can see, we're respecting this bearish fair value gap here, and then we end up coming to take sell side liquidity. So as well as taking that sell side liquidity, what we also do is we also fill this 1 minute bullish fair value gap right here. So what I mean by fill is we completely come to the bottom of it. So if we imagine this was a bucket of water, as you can see, we come to the bottom and we completely fill it. That analogy didn't really make sense, but you know what I mean. We just completely fill the whole of this blue box. There is nowhere that hasn't been filled yet. So if we also go to the 5 minute, we have also completely filled this 5 minute fair value gap. But the important thing is we have not had a candle close below the fair value gap. Now, why is this so important? This is important because if we did get a candle close below this fair value gap right here, so let me just mark this out, fair value gap, FVG means fair value gap. So if we did get a candle close below this fair value gap, I would then most likely not take the long setup that I'm about to show you. And the reason for that is if this candle closed below this fair value gap, then this fair value gap would have turned into an inversion fair value gap. All an inversion fair value gap is once a fair value gap is violated. So if this fair value gap was closed below, that would then be an inversion fair value gap, and that is what I actually use to enter into trades. So I would have then most likely been looking for this sell side liquidity to be hit, but let's ignore that right now because as you can see, price action is holding this 5 minute fair value gap. So then I go to the 1 minute fair value gap, and what do I see? I see a nice bearish candle being created. So this bearish candle I will mark out. Let me just make this. So I'll mark out this bearish candle. Now, why is this bearish candle important to me? I would never take a short position off this fair value gap. Now, most people, if they are bearish in this market, they would be taking short positions from this fair value gap. Their stop loss would be at this high or at these highs here, and they would just be targeting lower price action because as you can see, we are in just a little downtrend. But one of the important things to remember is what do we have resting up here? We have equal highs up here, which are still a very big draw on liquidity. So with this bearish fair value gap that most people will be shorting from, what I actually wait for is this fair value gap to be inversed. So what I mean by that is, and as you're about to see, I want to see this fair value gap have a candle close above. And as you can see, right there, this bullish candle here has closed above this bearish fair value gap. So the fair value gap is these three candles here. We have closed above this bearish fair value gap, so I would enter into a long position here. My stop loss would be if we got a candle close back below this fair value gap, and then where would my take profits be? Now, my first take profit would most likely, well, my first take profit would be right here, and the reason for that is, let me just mark it out, this is called internal liquidity. So this is so what I mean by that is just, as you can see, we have all these highs. So we have a high here, we have a high here, we have a high here. We also have equal highs here actually, so that would be another good take profit point. But yeah, coming back to these highs we have, these are all internal. These are all inside this bigger move. If we look at the 5 minute time frame, these are all inside this big move. So our main take profit where runners would be kept would be up here at these equal highs. Now, there are multiple ways that you could manage this position. I personally would take most of my position off here. Although, yes, I am looking for these equal highs here and these should be the draw on liquidity, you don't know that at the time, and obviously this is such a big move. This is a 90-point move. I would not hold 100% of my position for that much as a move. And as well as that, we also are still trading in this bearish fair value gap. So we could easily take this buy side liquidity like this and then still end up coming back down and carrying our bearish move. So that would be my entry. As well as if we do hit this buy side liquidity, the first thing that I would do is move my stop loss to break even as well. So let's just play out the price action. And as you can see, we take that first buy side liquidity. So what would I want now? I would move my stop loss to break even, and how I would use this bearish fair value gap is I would want this bearish fair value gap right here to also be closed above, and if this bearish fair value gap was closed above, I would want this whole bearish fair value gap to hold and take us to these equal highs. I wouldn't enter into any more positions now. I would just let my trade run. My stop loss would be at break even, so it would be a risk-free trade, and as you can see, we then get a close above that fair value gap. So now this, oh wait, do we? Okay, never mind, we don't there, we get a close above the fair value gap there. And as you can see, look what happens. As soon as we get, so that, let me just mark it out. This is the top of that bearish fair value gap, okay? Let me just mark it boldly. So this black line is the top of the fair value gap. Look at how as soon as we get a candle close above this fair value gap and violate this bearish fair value gap, look what price action does. Price action shoots up immediately, and that is just a perfect reaction of what you want to see off of the fair value gap. And then where would our target be now that we've inversed this 1 minute bearish fair value gap? Our target would be this liquidity right here, just because it is internal. But don't mind that, because we are not actually going to be entering into any positions. Most of our take profit would already been hit down here, and then we would just let the price action run. We come back, tap into this. This would actually be a bullish breaker block, but we tap into that, and then we slowly end up moving upwards. Now, obviously, this price action isn't the best price action, but that is why we take most of our profits off at this first initial buy side liquidity, because it is just the safest point. We don't then have to sit through all this chop, and then our runner would eventually get to hit take profit in the PM session. So yeah, I hope this video was helpful. This is just my strategy that I use. It's got me funded. It's profitable strategy. The win rate is extremely high. If you want to see me trade this strategy, then just click the first link in the description. It sends you to my Discord. It's completely free. You just have to verify, and then you will join my Discord. So yeah, thank you guys for watching. I hope this video helped.